Over 90% of day traders lose money. They treat the markets like a casino, relying on emotion until their accounts inevitably collapse. Professional firms operate on a quantified edge, using mathematical models to replace the variable of human intuition. In this video, we are going to construct a mechanical, rule-based trading strategy from scratch. We will prove its profitability before you ever risk a single dollar of your own capital. You only need two tools: your preferred charting platform and a blank spreadsheet. A written mathematical plan acts as a filter for the impulsive decisions that often lead to account liquidation. Step 1 is eliminating variables. You need to lock your focus onto exactly one market and one time frame so we can gather consistent baseline data. A strategy optimized for the slow, sweeping trends of a daily stock chart will fail if applied to a volatile 5-minute crypto chart. The math does not translate. Once you select your market, you must shift from subjective observation to strict binary execution. Every rule we create must remove your personal interpretation. A subjective entry buys because a trend feels right. An objective rule buys only when price breaks resistance with a volume spike, closing above the line. Define your exits beforehand. A strict stop-loss caps downside, and a take-profit target locks in gains. Binary rules eliminate any in-the-moment hesitation. You force yourself to act only when the mathematical conditions of the setup are perfectly met. Capital preservation and strict risk management provide the structural stability that technical indicators cannot offer alone. To protect your account, adopt the 1% rule. By risking exactly 1% of your total capital per trade, a triggered stop-loss becomes a controlled, localized failure that barely dents your balance. This brings us to the core metric of profitability: mathematical expected value. Expected value, or EV, is the average financial outcome of a trade when repeated over a long duration. You calculate it by multiplying your win rate by your average win and subtracting your loss rate multiplied by your average loss. Amateurs often focus on high win rates, but if your average loss exceeds your average win, an 80% win rate will still bankrupt you. Let's run the numbers. If you win 40% of your trades, but your average win is $200 and your average loss is $100, the math guarantees long-term profit. Understanding your expected value shifts your psychology. You stop fearing individual losses and start trusting the long-term probabilities of your system. Now we have to prove that your EV is positive. We do this through backtesting, isolating your new binary rules and manually scanning historical charts to find past setups. Go back to your empty blank spreadsheet. For every single setup you find, record the win or loss outcome and the exact dollar amount the trade would have generated. Look at this checklist. We are distilling your market choice, entry triggers, exit rules, and risk limits into a single 5-point pre-trade protocol. This is an absolute law. If a setup fails even one single condition on this document, you instantly abandon the trade. Take this proven checklist and run it through a simulated demo environment for the next 30 days to forward test your execution. Rigid checklists and back-tested data reduce the market's noise, making trade execution a mechanical exercise rather than a high-stress gamble. You now have a written system. You have a risk management protocol and mathematical proof your strategy works. But you need to prepare for a severe psychological shock the moment you transition from that demo environment to risking live capital. The emotional weight of real money induces panic. It will cause you to hesitate on perfect setups or convince you to close a winning trade prematurely just to secure a small gain. To forge unbreakable habits, you must treat your demo testing phase with the exact same emotional weight and discipline as if those funds were real. To start building your edge today, download the EV backtesting spreadsheet linked in the description below and begin logging your data. Because ultimately, a mathematically prolific strategy is only as profitable as the discipline of the trader executing it.